Hey guys, welcome back to my YouTube channel. My name is Alayla and I trade trend lines. Today we're going to do a top-down analysis of volatility 10. Yeah, that's what we're gonna do. If you like, please like the video, share, tell a friend. We're gonna do this thing using trend lines, alright? Simpler. Let's get into the video. Okay, so we're gonna go on 10. I'm currently in a trade on 10. I'm gonna show you the trade before I go on a clean chart. So it's just my top-down analysis. So y'all know the break of the trend line, right? So I entered at the break of the trend line at price 60.51, and my last target is gonna be here at the swing low here on the daily time frame. So yeah, let's get into that. Get a clean page. All right, so based on the chart here, we can clearly see that 10 is in a downtrend. It's trending downwards. I would expect, based on what I'm seeing here, we have a break of this low. We also have another break here. So we are expecting the market to continue down to this low right here to give us a break of structure to continue the downtrend that it's clearly in. All right, so we can still look for short opportunities down to the black line here. That's basically how I trade. If I see on the highest time frame, on the daily or the weekly, that there is internal structure, all of this here is internal structure until it reaches this black line and breaks it. So we have space to trade, and we can clearly see that the market is trending downwards within the internal structure to the downside here. So on the daily time frame, you can come in with a trend line. So the trend line is going to be like that. And then you can come in with something steeper. I'm going to color code this. The red is for down, as we know, the bearish candle. And let's continue adding our trend lines where we can. So this is where we left off. We can add a trend line there as well. This was almost a touch point right here. So this trend line is very valid. I wouldn't come in with anything steeper, because if I had done that before the market, before the current side of the market here, if I had come in with something steeper, it would have broken and give me a false signal here. So I wouldn't come in with anything steeper. All right, we're still on the daily time frame, and we can trade everything that pulls back to the red trend line here. But we are going to focus on the recent side of the market, which is this little section here. All right, so this is where the pullback happened. We can come in with a trend line. I'll go on the 8-hour time frame, add a trend line from this low for the pullback. As you can see, this trend line is very valid because we even have two swing lows here within the trend, and for a trend to be valid, you have to have more than one swing low, or more than one, for this, in this case, more than one higher low in the uptrend, the pullback uptrend here. That's basically how I trade 10. I just wait on the market to make its pullback on the higher time frame, create a trend, and then wait on the pullback to break the trend line that I drew. But let me also get into something here. On this green trend line that we have here, if we're working within the internal structure, let's get rid of the trend line. If we're working within an internal structure between this high right here and this low where the pullback has started, we come in with our Fibonacci retracement tool. As the market progresses upwards, we can enter into buy. So I'm gonna add the trend line back, the green trend line. All right, so this is the higher time frame trend line. It's on the 8-hour time frame because the trend was showing better on the 8-hour time frame. On the 24-hour time frame, you only have one green candle pullback, one red candle pullback. Sorry, let me show you what I'm talking about. So see, you have only one red candle pullback, so it's showing better on the 8-hour time frame, the trend, the pullback trend. So since we're on the higher time frame now, we can go down like the 15-minute time frame, the 1-hour time frame, and trade and look for a setup. Basically look for setups along this green trend line, keeping in mind that we're waiting on the green trend line, the market to break the green trend line. So this is what I mean. We're going to go down on the 30-minute time frame, and I'm going to show you what I'm talking about. The market is progressing. You know that when using the Fibonacci retracement tool, understanding market structure as well, when the market is doing a pullback, usually on the higher time frame also, it's going to make a steep pullback. It's gonna either pull back to the 38, gonna pull back to 61 or the 78 in this case. All right, so while the market is making its way up towards the 38% fib line, you can ride it. All right, so we're on the 30-minute time frame. I'm just gonna fix this here. All right, so we're on the 30-minute time frame. The market is making its way. There's also a trend here. Do you see the trend? So there is also a trend here. So this is how you can trade using trend lines. Every pullback that makes its way towards the green trend line, that's what you trade. There is a trend right here. We could see this on the 5-minute time frame. There's also, these are small, I wouldn't focus on these ones. There's probably one here as well, but that's too off to me. There's also one here as well. So I'm gonna go down on the 5-minute time frame to really show you what I'm talking about. That's basically how you do like a top-down analysis. You see the directional move on the higher time frame, this being in this case the highest time frame, the 24-hour time frame. Then we made our way down to the 8-hour time frame. We see that there is a pullback being made on the 8-hour time frame. Then we come in with the trend line for the 8-hour time frame. Then we came in with the Fibonacci retracement tool. As the market is progressing upwards to the 38% fib line, we see that there are trends being formed. Once there's a trend, you can come in with a trend line. All right. So remember, this is the trend. This trend line, this is the one that we saw on the that we made on the 8-hour time frame. This at the top here, I'm gonna color this blue so we don't get confused, because I will get confused sometimes. So this one up here, this was drawn on the 30-minute time frame that we just drew. All right, so as the market is progressing, and remember this black line here, this is the market progressing up to the 38% fib line. So as it continues upward to that level, you can catch trades basically. All right, so this is what I outlined on the 30-minute time frame. On the 5-minute time frame, you can clearly see a great example here. The market made its way towards the blue trend line. You come in with your pullback trend line, your counter trend line here, and then you wait on the break. You enter at the break and you continue. You can target the high that started the pullback. You can also come in with a trend line like this, and then you wait on the break to exit. You can do that. This is how I trade Forex. I just have a higher time frame trend line, and every pullback that makes its way to the higher time frame trend line, in this case the blue trend line, I that's a setup for me. This is the other one that I outlined. This is a setup for me. It made its way towards the blue trend line, wait, literally coming with a counter trend line and wait on the break. That's literally how we trade it. This is another example right here. It hasn't touched the 38% fib line right here, so we're not looking to sell. Remember how my strategy works. If it doesn't reach the 38% fib, we're not interested in the pullback or the trade any at all. This gave us a break right here. I wouldn't take the sell because it didn't reach the 38% fib line. So while the market is making its downtrend towards the blue trend line, we can come in with a trend line right here. So we come in with the trend line right here. When it breaks the blue trend line, do not be fooled, because remember, it did not touch the 38% fib line as yet. So we're not looking for sells. We're still looking to continue to buy up to the 38%. So even if it broke the blue trend line here, we wouldn't be interested. We would wait until the market breaks the red trend line. Even if the market continued to fall, that's fine, let it go. On the higher time frame, it didn't touch the 38 yet, so we're not interested in the sell. So as you can see, the market broke the blue trend line here, giving us false signal that it's going to reverse, which it didn't. The actual signal that you should have taken is when the market broke the red trend line here. You enter into a buy, and with the lower time frame, I will always say this, with the lower time frame, your stop has to be at the previous, in this case, the previous low. It has to be at the previous structure. All right, you can't, it's not like how I trade on the 4-hour time frame. I can easily just put it at the 4-hour candle high. The 4-hour candle that broke the trend line, I can put it there above that candle or below that candle. But when you're on the lower time frame, it has to be at the previous structure. It's going to be a high, your stop is going to be wide, but that's fine because you know where the market is going, right? So you'd enter here, you'd probably put your target here, or you can put it somewhere around the 38% fib line up here. So the entry would be like this, your stop would be something like that, and then your target would either be this high right here, or it can be the up where the black line is, to get a better risk to reward. So that's how that would look. Let's also see this one. This is how this one would look. Your target would probably be here if you want. It just depends if you want to put it there, or you want to come in with another trend line and wait on that trend line to break. That's how this one would look. All right, so let me show you how this one would look. So you're not going to always get the same results. All right, so some are straightforward like this. Your stop has to be at the previous structure, the previous level there, the previous low. And as you can see, is either you target the high here, or you let it run and come in with another trend line. Your exit would be at the actual break up here where it broke right there. So you're not going to always get the same result, because look at this one. This one was consolidating for a while. You were up, and then it came back in loss. This, you didn't come back in loss any at all. So it's just basically how you want to trade. If you want to trade using support and resistance, swing highs and swing lows, you can do that. In this case, where you target the high that started the pullback, you can trade using the counter trend lines, like coming with a trend line and wait until it breaks, like what happened, like what I demonstrated here. You can do that as well, and you can also use your Fibonacci retracement tool also. So yeah, that's basically how you would do a top-down analysis, right? And then how you can analyze on the daily time frame straight down to even the 5-minute time frame. All right, so when you get the break here, the fake out here, which we weren't actually looking for, you can adjust your blue trend line. You can adjust it, or you just get rid of it completely. In this case, let's adjust it, go back on the higher time frame and see what happened. See what is happening. Remember, you can't always stay on one time frame. If you do that, you're going to put yourself at risk. All right, so it broke the blue trend line here, and then created the swing low for the higher time frame green trend line that I drew here on the 8-hour time frame. Then it continued, broke past the 38, continued almost touching the 61% fib line, and then fell to the downside. All right, so I don't really want to make the video that long. So guys, if you've made it this far, comment trend line. Just leave the word trend line in the comments, so I know that you are a full video watcher, if that makes sense. All right, thank you for actually watching. Thank you for subscribing if you've already subscribed, and I hope you enjoy the rest of your day also. Yeah, bye.